Hi, this is Paul from globaltradingsoftware.com, and this is a trading tutorial video for the Cradle to Grave trading bundle. So the Cradle to Grave is signal and then the trade management. The signal comes from the xBratAlgo. That's my trading brain. That grades potential trades, longs and shorts. We get 3, 4, 5 or 6 star buys or sells. In this case on ES on Friday on the 12 minute, which is one of my favorite time frames, we get the 6 star sell here. Now, for a 6 star sell, there's 12 points of control that all have to be aligned before that signal is produced. So that's a high probability move. The entry for this is one tick below the low of the signal candle. So that's fine. Anybody can get in a trade, but the manager, the second part of that Cradle to Grave bundle, is the most important part, because that lets you understand the behavior. And actually it manages you. It tells you that, hey, this pullback isn't high volume, you should stay in this trade, and this is the reason why. And I'm going to go through that right now, because I think it's important to understand. This is a real, on our Discord group we were discussing this trade, and I was saying, look, the manager is telling you to stay in this trade. I'm going to show you some of the reasons why. So again, 6 star sell, we go short just there, one tick below the signal candle. But let's go back and look at the behavior of the manager. So the manager is the ones with the dots above the candles and below the candles, and it colors the candles in different colors. And then we've got, you can see here the cloud is green at this point here. If I just zoom out a little bit, we got a bullish bias cloud here, but then the cloud turns bearish and red here. So what I want to do is talk through that behavior and how the trade is managed. So the candle before the signal candle is a red candle, so that's a distribution candle. It has more sellers in it. It has higher volume than this previous candle, which actually was a high volume rejection of the highs there, which is a good precursor to this move down. You see how it rejected the highs there? That's a green candle, so that's a higher volume, but it's an up candle than the previous candle. But more importantly, it has higher than average volume. That's cyan dot above. Then we get cyan dot above again, distribution. And then the signal candle was another distribution candle. So the volume for this moment in time, for this 12-minute moment in time for that candle, was higher than this previous one. It's also higher than average volume. That's our signal candle we get in. Then the next candle that takes us in, again, lower low, lower high, big red candle there, has more volume than the previous one. There's more sellers in the market. It's got higher than average volume. As we see then, the momentum goes down with our trade there, and then we start to find support. But we find support with lower than average volume, these blue dots which are below. Then we start to move up these grey candles. So these grey candles have less volume than the previous candle. Then there's a second grey candle which has less volume than the previous candle. So this is running out of juice. The manager's telling you, hey, this pullback against that main move that you're in actually has lower than average volume, and it's telling you each candle has lower volume than the previous one. We come up, it's like a roller coaster if you like. We come up to the top, we run out of juice, and then we start to come back down again. We're coming back down again with lower than average volume, but we can see these distribution candles coming in now, and again here, until eventually we get another 6 star sell signal here. So if you've panicked and not listened to the manager and got out on this pullback, there's another opportunity to short ES into the close for the day. As you can see here, that momentum builds up again with distribution, all with higher than average volume. Also, when you are looking at this cloud tells you it doesn't change from red to green. So this is a conservative trade management strategy. If it did turn to green at this point, you would take your profit and get out, but it didn't. It stayed red. It's telling you to stay in. We had no high volume accumulation candles, which are the green candles with a cyan dot up above. So there's no real power in this upward move. In fact, it started to come back down again. So this is how the manager works, really. And again, it's a very visual presentation. It's obvious with that visual presentation for that 6-star sell, that's the signal, go short under there. But then we've got these dots, and again, I'm in the description for this video, I'm going to put a link to the training for the manager. It's very simple. With those cyan dots up above, that's higher than average volume. You put that together with those distribution candles in this case, and you are getting some very big bearish momentum. But then when it pulls back against your bearish trade, it's pulling back with lowering volume each time and lower than average volume. The manager's telling you, it's telling you to wait, be patient, it's going to come back down again. And a lot of the time this is correct, and there you go to the short into the close. So hopefully this helps. It's about getting those high probability signals, but then more importantly is to manage those trades sensibly and not panic. A lot of retail traders, when the futures trading panic, starts to pull back against them, they just take their profits. But in the end, there's potentially a lot more profit in there, and the manager is designed to maximize those profits consistently. Hopefully that helps. Speak to you all really soon.